And here's a surprise. Stuff that normally goes down on China tariff news fairly well. There's the China internet stocks. Hey, we're up. Good heavens. Metals and mining normally go down on negative tariff news. They're up. Energy also usually down. It's up. Banks, forget about it. Don't get me started on the banks. They're awful. Why exactly are we moving up? There's a couple of reasons. One, the tariff was only 10%, not 25%. Number two, small parts of the economy. You know, you hear about these exemptions the guys are talking about. Apple, Fitbit exempted from it. That's a big help. And finally, China's market's up nicely. Look at China overnight. We had the Shenzhen up. We had the Shanghai was up. Hong Kong was up. The Nikkei was up. Spain and Germany are to the upside. I would be careful about assuming that suddenly none of this matters. It does matter. There's a lot of talk about new stimulus programs in China going through. And if you pick through what's been moving in China overnight, it's all these massive construction companies like China Resources Cement, China State Construction Companies. China Railway was up 7%. Angang, all the steel companies were up 5, 6, 7, 8%. This is on stimulus talk. And of course, some of it is to avoid a shutdown or slowdown, in China and to combat some of the negative effects of the trade issues overall. We have to talk about what kind of trade war we are in right now. I hope you all watched Jack Ma at the top. We ran some sound from him. It really was quite something. A trade war could last for 2 decades? He called it a mess. He mentioned China businesses might move production elsewhere to avoid the tariffs. That could be out there as well. B of A does a monthly survey of fund managers. Take a look. Once again, this is the 4th month in a row. The biggest threat to the global growth is the trade war. 43% cited that. 4th straight month, number 1. China's slowdown is also up there. That's why the Chinese are out doing stimulus, 18%. And quantitative tightening, of course, that's the Fed and the long-term impacts. But you see, that's a distant number 3. Right now. The trade war is also showing up in CEO commentary. Our Courtney Reagan talked with Macy's CEO Jeff Gannett over at the Recode conference. He came out and said, we do expect there will be more tariffs and that it will start to affect a department store more significantly because of the apparel pieces that are going to be a part of it. What I can say is we've been working with our own supply chain. We've been looking at our own private brands, and we're prepared for this. This is a variation on what Jack Ma was saying, meaning their own private brands that may be in other countries, in other words. He's paralleling what Jack Ma has been saying. Okay, where are we right now? What does this all mean for the U.S. markets? Right now, we're a little bit bifurcated. We've done really well. The transports are doing well. Industrial, some of the machinery stocks are doing really well. And healthcare, which is not directly affected by all this tariff talk, is just a stalwart and has been outstanding. And one of the main reasons the S&P is near a new high. I say still weak, either way, positive or negative, are the semiconductors, and clearly out of favor are bank stocks. I've been emphasizing we have more bank stocks that are close to 52-week lows than 52-week highs. It's just a mess there, and that's the major problem the markets have got. Just take a look at some new highs. We've been seeing this day after day in most of these stocks, but the railroads, you've got key industrials like Dover, Emerson Electric, also 52-week high. Fairly limited group right now, though. Up 96 points, though, on the Dow.